Universal Studios in Bedford. Why this could be the best property investment opportunity of the decade. Hey everyone, and welcome back to the Sam Lowney YouTube channel. Today we're talking about something absolutely massive that's happening right now on our doorstep here in the UK. Something that could genuinely transform an entire region and create what might be one of the best investment opportunities we have seen in years. And I am talking about Universal Studios coming to Bedford. Oh yes. Now, before we dive in, I need to be crystal clear with you from the start. Everything I'm going to share with you today is based on current information, projections, and historical patterns from similar developments. But here's one very important thing. This is speculation, nothing else. It's pure speculation. The property market can be unpredictable. Developments can face delays, and no one has a crystal ball. So please, 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 do your own thorough research before making any investment decisions. Speak to professionals, crunch your own numbers. Never invest more than you can afford to lose. I'm not a financial advisor, and this is not financial advice. It's just my opinion based on observations. That said, what's happening in Bedford is genuinely exciting, and I want to share with you why I think this area deserves serious attention from property investors like you. Whether you're a seasoned investor or somebody who's making their first property purchase, this is something you need to understand. So let's get into it. Before we get into the video, I just wanted to ask, do you have a property funding requirement or a property funding problem that needs a solution? If so, reach out to me at Merry Oaks Property Finance. Merry Oaks Property Finance is a brokerage that I set up in 2021 to support SME property investors and developers like myself, like you, with all of your funding requirements. So if it's development, bridging, commercial, anything property finance related, the more complex, the better as well, because we're very used to those types of things. If you're a portfolio landlord, whatever you might need, let us know. Reach out to us. Let's have a conversation and see where we go. Now back to the episode. I really hope you enjoy it. So first things first, let's talk about what's actually been confirmed, because there's been a lot of speculation and rumors flying around, and we need to get down to some of the facts. In December 2025, the UK government officially granted planning permission for Universal Studios Bedford through a special development order, with the order coming into force on the 12th of January 2026. This isn't just talk anymore, it's really happening, and construction has officially begun. The planned opening date is 2031, which gives us about 5 years from now, and that's a good time, a very good time frame to get in early. And the scale of this is absolutely enormous. Universal is planning to build a world-class theme park with several themed lands, visitor accommodation, retail, dining, entertainment uses on approximately 700 acres of land. Oh my God, this makes me very excited. The UK has never really been a great host to big theme parks because of the weather here. I had the benefit and privilege to go to Disneyland and Universal Studios in California when I was around 9 years old, and it was amazing. What an experience. But what it does for the economy as well is unbelievable, for employment, for the multiplier effect, and so much more. So to put the size of the scope of the project, well, I mean, it's just massive. It's a huge project. This will be Europe's first Universal branded theme park and resort. Now, here's where it gets really interesting from an economic standpoint. Universal estimates this project will generate nearly £50 billion of economic benefit and create around 28,000 jobs. 28,000, let me repeat that again, 28,000 jobs. Yes, that breaks down into approximately 20,000 during the construction phase and 8,000 permanent roles once it opens up. And these aren't minimum wage jobs either. We're talking hospitality, we're talking about management, technical roles, creative positions, tourism professionals. There's a lot to it. The location is crucial here as well. The site is around 3 miles south of Bedford town centre at the former brickwork site at Kempston Hardwick. It's approximately 1 hour's drive from London, very important, under 2 hours from Birmingham, and you've got excellent connectivity to the entire southeast and the Midland. It's well placed, more or less in the centre of the UK. And here's something that often gets overlooked in these discussions. The project will help deliver several long sought after transportation upgrades. We need better infrastructure on transportation across the country. We're talking about an expanded Wixham's railway station, direct slip roads from the A421, and other local road improvements, which are always massively welcome. And I'll share with you a little bit more on Wixham Station in a moment, because that's absolutely crucial to the investment thesis of investing in property in that local area. The government estimates the resort could draw anywhere between 8.5 and 12 million visitors annually. To put that in context, that would instantly make it one of Europe's most visited destinations. That is mind-blowing. That's not a few thousand people, that's millions coming through Bedford every single year. This isn't just a theme park, this is a complete transformation of the region's infrastructure, economy, and identity. And I think it'll have wider ripple effects for the UK as well. Right. So let's talk about the short-term investment opportunity here and why savvy investors are already starting to pay attention to Bedford and its surrounding areas. According to the Rightmove's House Price Index from December 2025, average house prices in the MK43 postcode area, and that's the Bedford area, showed a 5.4% annual increase, outpacing the East of England average. And that was before construction officially started in January 2026. Zoopla's December property market report showed that Bedfordshire demanded levels rose by 8.1% quarter on quarter. Now, here's my speculation based on what I've seen happen with similar major developments over the last 25 years in my property career. We're likely to see property prices in the immediate area start to rise significantly over the next 2 to 3 years. Why? Because right now, construction has just started. The reality of Universal Studios is becoming absolutely tangible. You can go and see it. People can see the groundwork beginning, cranes on site, roads being built, and suddenly this isn't just a future possibility. There's no risk that it might not happen. It's happening right now before your very eyes. Historically, when major infrastructure or leisure developments are announced and then actually begin construction, you can see property prices start to move in distinct phases. First, there's the announcement bump, which Bedford has already had when Universal first revealed the plans. Then there's the it's really happening phase, which is where we're at now and what we've entered into with the construction starting. And finally, there's the pre-opening surge as people rush to get positioned before the park actually opens. I would speculate, and it's just speculation, that if you're buying now in early 2026, you're potentially getting in during a very sweet spot. You're past the initial speculation phase where some properties already saw some price increases and there was a lot of risk in case it didn't happen, but you're well ahead of the pre-opening rush that I would expect to happen around 2029, 2030 as opening starts to approach. This happened with the Crossrail. I saw it firsthand happening from east to west of London. According to Country Properties, savvy landlords are already seeking properties with strong commuter links, off-street parking and garden space, all attractive features for young families and professionals who'll be working at Universal or in the related businesses that's going to be supporting it. The short-term play here, in my opinion, is about capital appreciation. You're buying an asset that's sitting in an area about to go massive transformation. If you buy a property today for $300,000 and by 2030 similar properties are worth $380,000 or $400,000 because of increased demand from Universal employees, construction workers and businesses setting up services to service the park and everything else that goes on around it, that's significant wealth creation in just 4 to 5 years. But remember, and I cannot stress this enough, this is speculation. Please do your own research. It's really important. Property markets can be affected by all sorts of things. So whilst we're building all this infrastructure, property prices can be affected by interest rates, economic conditions, and thousands of other factors, lots of variables. What if there's a recession? What if interest rates spike to 8%? What if construction gets delayed by a year or two? All of these things could impact your returns. So do your own research, stress test your numbers, and only invest what you can afford to have tied up for years. Make sure you do that as well. Very important. Now, the short-term gains are exciting. Yes, yes, yes. But the long-term opportunity is where I think the real wealth will all be built. And that's always the way that I think about real estate. It's a long-term game. One of the first things I ever learned was property is a marathon, not a sprint. And this is all about rental income and sustained demand over decades, not just years. Let's think about the employment picture. 28,000 jobs total, 8,000 permanent roles in hospitality, tourism, technical operations, and creative industries. These people need somewhere to live, right? Not all 8,000 permanent employees will be renting in Bedford. Some will commute from London or nearby towns. Of course, that is the fact. Some will even buy their own homes. But let's be conservative and say even 30 to 40% of those people, they're all going to be renting. That's 2,400 to 3,200 potential tenants that have a stable employment and income and that are all related to the Universal Studios. That's 2,400 to 3,200 potential tenants who have a stable employment directly related to Universal Studios. And remember, theme parks are year-round employers. These aren't seasonal jobs that disappear in the winter. These are permanent positions with career progression. Then you've got the visitor economy. Universal estimates 8.5 million visitors in the first year alone, potentially growing to around 12 million as the park matures. 8.5 million. Now, many of those will be day visitors from London or elsewhere in the southeast, but a significant portion will be staying overnight and coming from overseas, etc. Some will stay in the Universal Studio hotels that are being built on site, but there will be absolutely an overflow demand for Airbnb properties, serviced accommodation, short-term rentals in the surrounding area, hotels, of course. Now, if you own a property within, say, 5 or 10 mile radius of the park, particularly in Wixon, Kempston or Bedford Town Centre, you have the opportunity or the option to pivot between long-term rentals to employees and short-term rentals to tourists, depending on what is more profitable to you. And that flexibility is incredibly valuable, and it's something you don't get with many other property investments. Here's another angle that people aren't really talking enough about, and it's the knock-on economic effects that benefit the local area and the wider economy in general. Universal Studios doesn't exist in isolation. You'll see supporting businesses spring up left, right, and center all around it. You'll have restaurants, you'll have cafes, you'll have shops, transport services, cleaning companies, maintenance firms, suppliers. All of those create more and more jobs, which creates more and more rental demand. It's a multiplier effect. It's something, one of my favorite things when I studied economics, understanding how that multiplier effect works. It is amazing. The average rental yield in Bedford right now is currently around 4.77% according to Country Properties, which is a decent but not spectacular compared to northern properties or northern cities and towns, etc. However, I would like to speculate that areas close to the Universal Studios site, particularly Wixham and Kempston, could see rental yields improve as demand increases, particularly for properties suitable for multiple tenants or those that can be used for short-term lets. So let me give you a realistic scenario. You buy a 3-bedroom house today for $350,000 in Wixham, right next to where the station will be, and you rent it long-term to a Universal Studios employee for about $1,500 a month, £18,000 of gross income per annum, which is about 5.1% gross yield, which is reasonable. Not amazing, but reasonable. But then during peak summer months or school holidays, you're able to switch it to short-term lets because you've got families visiting Universal from all over the UK and Europe. You can charge £150 per night during peak season. You're fully booked for July, August and half terms. That's an extra few £1,000s right there over the years. Suddenly, you're an attractive, effective yield of around 6.5%, and that's before we factor in all the capital growth, etc. If that £350,000 property is worth £480,000, or even let's say £500,000 by 2035, you've made £130,000 to £150,000 equity whilst generating income the whole time. Now, bearing in mind, of course, if you're going to do short lets, you're going to have to think about things like all the bills inclusive, and of course, you've got the Renters Reform Act. So there's a bunch of stuff that you've got to take into consideration if you put it onto the short let market or you put it on the long-term market, jumping backwards and forwards. But these are just some things that you could possibly consider, because who knows, the Renters Reform Act might be thrown out by then anyway. These are some things that you've got to think through in your mind. But ultimately, you can see that there's gains to be made. That's the power of being positioned ahead of the major development. But again, disclaimer, rents could be lower than expected to by of all the investors piling at the same time, and suddenly there's an oversupply in the market. Short-term let regulations can tighten. Capital growth might be slower if the economy struggles. These are risks that you have to factor in. So although I'm an optimist and I can see why it's going to be so good, there are plenty of things that can derail it as well. So you just got to be aware of that. Do your own research. So here's something that makes Bedford particularly interesting, in my opinion, and it's got nothing to do with Universal Studios, although it compounds the opportunity beautifully. Now, Bedford is already one of London's best commuter towns. Bedford is only 46 miles away from London. Here's the key. You can reach London St Pancras in approximately 40-45 minutes by train. That's faster than many areas inside London's outer zones. I used to live in zone 4. It used to take me 35-45 minutes to get into town just from East London into town. So 40-45 minutes from Bedford is pretty good. In 2017, Bedford was crowned London's best commuter town based on the commute length into London, housing affordability, quality of schools, activities that were surrounding the area, and overall just general quality of life. And it was beating competition from the likes of Canterbury, which is a beautiful place, Chelmsford, Letchworth, and a variety of others. So it's doing pretty well. It's in good company, and it was the winner in 2017. That's got to be saying something. Now, think about what this all means for your investment. You have a town that's already attractive to London workers who want more affordable housing and a better quality of life than they can get in, let's say, zones 3, 4, and 5. Now, add Universal Studios on top of that existing demand. You're not just betting on theme park employment. You're investing in an area that has multiple demand drivers supporting property values across the board. There are roughly 5 to 6 trains to St Pancras every hour during peak times, with journeys of about 45 minutes. That's fantastic connectivity for commuters. You're talking city workers, consultants, professionals who can all afford decent rents and who value quality accommodation. So you've got London commuters who want affordable housing with fast transport links, Universal Studio employees, you've got construction workers, tourists and visitors looking for short-term accommodation. You've got students as well from the University of Bedfordshire, which is local to the area. You've got professionals working in nearby Milton Keynes, Cambridge, and even Oxford. All of these are within reach. And that's a very diversified demand base. And in property investment, diversification is your friend because it reduces risk. And I've done that myself. I started my HMOs. I started from students, then I took it to professionals, and then it was to short lets, and now I'm doing some social housing stuff. So you've got to have that available to you. You know, if one segment of the market softens, maybe like London commuters slow down, you've got other tenant pools to tap into, and that's really powerful. That's really important. Average house prices in Bedfordshire are significantly lower than London and even many of the surrounding counties. So with combined excellent transport links, this is why Bedford has been growing steadily for years, and Universal Studios is about to turbocharge that growth, in my opinion. Right, so if you are seriously considering investing in this area, where should you actually be looking? Let me share some of those thoughts, but again, please do your own research. Visit these areas yourself. Check out all the links online. Check out some of the stuff that we're putting up on the screen here, which is where we get a lot of this information from. Speak to the local agents who know the areas really intimately. Walk the streets, talk to the people, get a feel for the places. I mean, first up, here we go, Wixham's. This is the big one. Wixham's is a planned community of approximately 4,500 homes located just 2 miles south of Bedford's town centre. This is basically right next to where Universal Studios is going to be built. And here's the absolute game changer. Wixham's railway station. This station has been in planning for years and years and years. Originally supposed to be open by 2024, it got delayed, but now with Universal Studios coming, there's a massive push to get it done. The current plan is for the station to open with enhanced capacity, potentially with 4 platforms instead of just the original 2, specifically to handle Universal visitors and employee traffic over the years. So when the station opened, you're talking about direct trains to London St Pancras in approximately 50 minutes. That is huge. You're literally on the doorstep of Universal Studios with direct trains to central London, and that's the dream for both Universal employees and London commuters who want to live near the park. The challenge with Wixham's is that it's a new development, so you're typically buying new build properties which command a premium. You might be paying around $350,000 to $400,000 for a 3-bedroom house, but the upside is you're buying modern, energy efficient homes with warranties that will appeal to renters, and you're in the epicenter of the action. So don't worry about it too much. There are huge upsides to it as well. And you're as close to Universal Studios as you're gonna get without actually being inside the park. Next up is Kempston. This is the area immediately adjacent to the Universal Studios site, essentially where the old brickworks used to be. It's more established than Wixham's, and with a mix of Victorian, Edwardian, and modern properties, you might find better value here compared to Wixham's because you're buying older stock. Personally, that's my preference, to be honest. I do like a little bit of the older stock that's been a little bit modernized rather than buying new builds in general. That's my personal preference. So things like Victorian terraces or semi-detached houses, they're all very, very nice. And you might pick up a 3-bedroom house for around 280,000 to 320,000, but you're still extremely close to the park, which is very valuable. I mean, literally a 5-minute drive or a 15-minute cycle. And Bedford town centre itself is worth also considering, particularly areas like Castle Road, the Poets area, and the Embankment. These are more established, sought-after residential areas, so you're already getting a little bit of certainty with what you're buying. You've got these grand Victorian properties line the Embankment area of the town alongside the Great Ouse River. Beautiful properties, tree-lined streets and parks nearby. It really is very, very nice. Haven't actually been there yet myself, I'll be honest with you, but I've seen all the photos and I've been on Street View and Google Maps all around these areas, and it is very, very nice. If you're going to buy down there, I seriously recommend that you go and have a look at it on the ground. I am going to be visiting there in the next few months because I am keen on having a look, but I'm not buying any properties this year as well, so I'm trying to sit on my hands for the time being. But if I am buying, I am definitely looking in that area. But also there's the other thing as well, is like, I do believe that you should be investing close to home, and Bedford's a little bit further out of my area, but I mean, the facts are speaking for themselves. So anyway, so in this area, you're further from the Universal site itself, maybe 3 or 4 miles, but you benefit from all the town centre amenities, the established rental market, excellent schools, and Bedford railway station, which already has multiple trains per hour to London as it is. Then you've got areas like Stuartby, Biddingham, and all the little villages around in the immediate surrounding area. And they're all on the radar as well, but you just got to be able to go and see them all and see what you feel comfortable with, really. Stuartby is literally where the Universal site is located, on the old brickworks. Biddingham is west of Bedford, very popular with commuters, and set around a lovely village green. It feels quite remote despite being close to Bedford Station, which is also quite nice. These villages are more affordable than Bedford Town Centre or Wixham's, but still within very easy reach of the Universal Studios site. If you're looking for houses with gardens, characterful properties, and lower entry prices, these villages just might be your absolute sweet spot and what you're looking for. You might find 3-bedroom properties for around 250,000 to 300,000. Now, here's something to think about for the more experienced investors that don't want just a simple buy-to-let, and they don't mind doing that kind of short-let service accommodation Airbnb thing. Purpose-built apartments or houses that could work as service accommodation. These are something to consider. Properties with 3 bedrooms or 4 bedrooms that you could rent to a family visiting the park. Properties with parking, because families with kids will be driving, typically outdoor space because they might be having dinner when they get home and they'll be staying a few nights. Modern kitchens and bathrooms. I mean, what you got to do is think about a family of 4 from Manchester or Newcastle driving down, visiting Universal Studios for a long weekend, and what would they want? That's your target tenant market. All right, let's talk numbers, because this is what actually matters at the end of the day. What kind of returns can you realistically expect? And I need to be very upfront with you here, and let me be very, very clear. I don't have a crystal ball. Nobody does. Anyone who tells you they know exactly what property prices or rental yields will be in the next 5 years is absolutely lying to you or delusional. But what I can do is give you some educated speculation based on current data, historical patterns from similar developments, and just knowledge from my 25 years of being in the industry. Current average yields in Bedford are around 4.5% to 5%. We mentioned that a little bit earlier, and that's fairly typical for commuter towns in the southeast and east of England. They're not Liverpool or Manchester yields of 7 and 8%, but they're solid, and the capital growth potential is significantly higher than those northern cities. That just has been how it has gone for so many years. My speculation, and it is just speculation, remember that, it's that the properties within a 2-3 mile radius of Universal Studios, so areas like Wixham's, Kempston, parts of Stuartby, these could see rental demand increases by around 15 to 25% over the next 5 years as we're approaching into the 2031 launch date. That increased demand might push yields up to around 5.5 to 6.5% depending on how prices move. If prices rise faster than rents, yields could actually compress. If rents rise faster, yields improve. On capital growth, this is where it gets really interesting. Bedford MK43 postcode saw a 5.4% annual growth recently, according to Rightmove. outpacing regional averages. If that pace continues or even accelerates, which I think is possible given that Universal Studios is going to be there, you could be looking at 30 to 50% capital growth between now and 2031. Now, there's different ways to make these calculations. This is just some of the variables that I've been throwing around. You got a stress test set up and down, but that is one way to look at it. So let me give you a realistic worked example. You buy a property today for £320,000 in Wixham's or Kempston. Between now and 2031, property values in the area increase by 40%, which is roughly about 7% compounded annual growth. That puts your property value at $448,000. That's £128,000 in equity gained over a 5-year period. During that same period, you're renting it out. Let's say for an average of $1,400 per month in rent, which is pretty conservative for a 3-bedroom house near Universal Studios. That's $16,800 per year. Over 5 years, that's £84,000 in rental income before any expenses. Now let's factor in your costs. You've got a mortgage interest, maybe £8,000 to £10,000 per year, depending on your rate. You've got a maintenance, you've got letting agent fees, you've got insurance, void periods. Let's say your net cash flow after all expenses is around £3,000 to £4,000 per year. Over 5 years, that's £15,000 to £20,000 in actual cash in your pocket. So you've made £128,000 in equity and around £18,000 in cash. That's £146,000 total return on an initial investment that might have been a deposit of around £80,000 to £100,000 in purchase costs. That's £146,000 total return for an initial investment that might have been an £80,000 deposit plus around £10,000 in purchase costs. That's £90,000 invested, £146,000 returned. That's about 160% ROI over 5 years, or roughly 21% annualized. Now, does that sound good? Does it even happen? Maybe, maybe not. Interest rates could spike and your mortgage costs could double. There could be construction delays and the Universal Studios doesn't open until 2023. The UK economy could hit a recession and rents could stagnate or fall. Regulations could tighten up and your costs could increase. A million things can happen and affect those numbers, and they probably will, to be fair. But the fundamentals, the 28,000 jobs, the 8.5 million visitors increasing to 12 million, the infrastructure investment, the commuter belt advantage, all of those are very real, and you can see the rationale for placing a bet on that. Ultimately, all of these create real demand for housing, which should support both rents and capital values over the long term. Right, I've spent a lot of time talking about the opportunity, but I promised you honesty. So let's talk about the challenges and the risks, because they absolutely exist and you need to understand them. Before we continue, a quick word from our sponsors, Merry Oaks Property Finance. Merry Oaks Property Finance is my finance brokerage, and I've been in property for 25 years. I started Merry Oaks Property Finance in 2021, and we support investors and developers just like you, just like me, across the country with all of their funding requirements. So if it's bridging finance, development finance, commercial, buy-to-let, multi-unit freehold blocks, VAT bridging, HMOs, hotels, industrial, the whole 9 yards, we can support you with that. Please reach out if you have a funding requirement, you need support with it, you want to speak to one of our experts, you want to speak to me directly, please reach out, let us know, and I look forward to speaking with you soon. Now, back to the video. First challenge, timeline risk. The park is scheduled to open in 2031. That's 5 years away. Construction projects, especially ones of this scale, can face huge delays. Look at HS2, look at Crossrail, and many, many others. Look at the Millennium Dome, if you remember that. All of these run behind schedule for years. Weather, supply chain issues, regulatory problems, funding issues, you name it, it can all go wrong. If Universal Studios opens in 2033 instead of 2031, that's 2 extra years you're holding the property before the full economic impact kicks in. Can you afford to hold for that bit longer? Does your cash flow or does your cash reserves support it? Second challenge, competition from other investors. I'm not the only person talking about this opportunity. Property investors across the UK are paying attention to Bedford now. That means you might face competition for properties which could push prices up faster than rents rise, compressing your yields and reducing your returns. If everyone piles in thinking the same, the opportunity can get crowded very quickly and it's all priced in and you don't quite make the gains that you thought you were going to make. Third challenge, Oversupply risk. If everyone piles into Bedford buying properties to rent out, you could end up with an oversupplied rental market, particularly in areas like Wixham, where thousands of new build properties are already being built anyway. Supply and demand works both ways. So too many rental properties, not enough tenants, and suddenly you're in the race to the bottom on rents or facing longer void periods and very stagnant capital growth. Fourth challenge, interest rates and mortgage availability. We've seen rates spike to 5-6% recently, and while they've come back down a little bit, there's no guarantee they won't rise again if inflation picks up. If you're buying with a mortgage, as most investors do, your numbers need to work even if rates go to 6%, 7%, or even 8%. So have you stress tested your investment? Can you still cover the mortgage and other costs if rates double from now to where they might go? Fifth challenge, changing regulations. The rental market is becoming more and more regulated every year. As we discussed in my first video, the Renters Reform Act, which I mentioned earlier in this video, the energy efficiency standards, licensing requirements, tenant protections, all of these affect your costs and your flexibility as you become a landlord. So make sure you're factoring in compliance costs, future-proofing your properties to EPC rating C where possible or above, and building in buffers for regulatory challenges we don't even know about yet. Some things can just pop out. I mean, it's hard to do it really, to be honest, but you've got to almost have that crystal ball in some way, shape or form. Sixth challenge, the park might not be as successful as a project. I know Universal is a massive brand with a proven track record. I've been there myself personally in California. It was amazing. And globally, they just have a hugely, massively positive, great reputation. But what if it doesn't work? I mean, they operate successfully in parks in the US and Japan, Singapore, but not every theme park succeeds. There's no guarantee of it. And the British weather isn't Florida or California. We get rain here and lots of it. Will the 8.5 million people really visit every year? Or will it be more like 5 million or 6 million or 3 million or 4 million? And these are real things to consider and stress test in your assumptions. Seventh challenge, local resistance and political risk. There are always people opposed to major developments, environmental concerns, traffic concerns, impact on local services. If there's significant political or community opposition, that could slow things down and even, in extreme cases, completely derail parts of the project. Keep an eye on local news and council meetings. And finally, liquidity risk. Property is illiquid. If you need to sell quickly because of a job loss, family emergency, or any other reason, you might not be able to. Or you might have to sell at a discount to get a quick sale. So make sure you have adequate cash reserves, at least 6 months of mortgage and costs covered. And don't overextend yourself across multiple properties and over leverage if you can't afford a few months of void periods. Look, I'm not trying to scare you off here, and I'm not trying to get you involved in the scheme either. I've got no shares in it. I'm just trying to make sure you go in with your eyes wide open. Every investment has risks. Question is whether the potential rewards justify those risks for your personal situation. And whether you're looking at the Universal Studios in Bedford or anywhere else in the country or anywhere else in the world for that matter, the fundamentals are always the same. For some people it will work, for others it just won't work. So given everything that we've discussed, who is this investment opportunity actually suited for? Just interrupting this episode to let you know that in the show notes you will find a link to a free deal appraisal calculator. It's a buy, rent, refurbish, refinance calculator that I built. I used it over 550 times to find the first few high-yielding income-producing assets that I bought, and it gives you every single cost that you need in there to make it super granular. It also calculates your finance costs, and you can manipulate and tweak the LTGDVs up and down, the arrangement fees, the interest rates. You hit update model and it will tell you how much cash you are going to make on a monthly basis, as well as your return on capital employed. It also has a section for your incurred monthly expenses if you're doing service accommodation or HMO where all bills are inclusive. It's really comprehensive. I use it myself and I want you too to use it. Now back to the episode. I think Bedford and the Universal Studios area is ideal for property investors who have a medium to long-term horizon. If you're planning to hold for at least 5 years, ideally 7 to 10 or 20, then you're positioned to benefit from both the upside from the build-up and from the opening, and the years after the opening when the economic impact is in full swing and the property values and the rents have both appreciated. It's suited for investors who are comfortable with buy-to-let properties and understand the responsibilities of being a landlord. This isn't a passive investment where you can just buy and forget about it. You'll need to manage the tenants either yourself or through an agent. Maintain the properties, stay on top of the regulations and the certificates that you need all the time, deal with the void periods and the problem tenants. If you've never been a landlord before, maybe start with something smaller and simpler before jumping into a speculative play like this. It's great for investors who want exposure to multiple demand drivers, which is something I really like about Bedford. Remember, this isn't just about the theme park. You've got London commuters, local employment in Bedford itself, you've got students and tourists. There is a huge diversification, which is very attractive because if one demand driver weakens, remember, you've still got others supporting your investment. It could work well for investors looking for service accommodation to really maximize those yields. Someone's a bit more experienced and it forms part of your overall portfolio strategy. And the tourist demand from Universal Studios opens up those options in a way that most community towns don't have really. But make sure you understand the regulations around short-term lets. In April 25, they removed the allowance that you could short let your property and get away with normal council tax, for example. You've got to pay double the amount now. And who else finally as well? I'm a firm believer that investing in your local area. So anyone that's in and around that local area, invest on your own doorstep. I think it's a great opportunity. Who might this not suit? Investors who need immediate strong cash flow. The really strong rental demands won't materialize until closer to opening time, and even then it might take time to build. So if you need the property to cover all your costs from day one and put money in your pocket immediately, this might not be the right plan play for you. You might be better off looking at northern cities with better established high yields. I think that's probably a fair way to go. Also, investors who can't handle potential value fluctuations. Property prices could dip before they rise, especially if we hit economic headwinds in the next year or two, especially if there's an oversupply of properties now they're going to be built in the local area. If you're seeing property value temporarily fall by 5 to 10%, will it cause you to stress out and force you to sell at the wrong time at a discount? If that's the case, maybe this isn't for you. You need to be comfortable holding for the long term and be able to weather the short-term volatility. And honestly, investors who aren't willing to do the thorough research and due diligence, you can't just buy any property in Bedford or anywhere else and expect great returns. You need to understand the specific areas, the types of properties that will be in demand, whether it's near the station or the park, the local rental market, the condition of the property, the demand drivers. The numbers need to stack up for your specific situation based on your own analysis. You need to do your own research, come up with your own conclusions, not just based on me saying, hey, it's a good opportunity. So let me share my personal view on all of this. Everything I've said today is based on publicly available information, my own analysis, and 25 years of experience doing property investment, development, and finance. I'm not being paid by anyone to promote Bedford, and I have no vested interest in you investing there or not. I really don't care whether you do it or not. I don't own any property there currently, though that might change, but I'm not going to buy anything in 2026. I've got to still sit on my hands, and I'm looking for commercial real estate, as I've told everybody in the past. But here's where I stand. I think Bedford is and presents a genuinely interesting opportunity for property investors who are prepared to hold medium to long term. The fundamentals are strong. You have a major international brand, Universal Studios, investing billions into the area. You have a government supporting it at the highest level with a special development order, which is not granted lightly. You have job creation and infrastructure upgrades that will benefit the area regardless of whether the theme park is a runaway success or just moderately successful. And what excites me most is the combination of all these factors. It's not just the Universal Studios in isolation, it's Universal Studios plus Bedford already being a strong London commuter town, plus ongoing regeneration, plus affordable prices compared to similar locations closer to London, plus the Wixham's railway station opening, plus the fact that it's a university town. When you get multiple positive factors aligning all like this, that's when interesting things can happen in property. And that's when you see oversized returns. As I mentioned, at the start of the channel, I haven't personally bought any property in 2025 or early 2026 because I've been laser focused on Merry Oaks and serving our clients the best of my ability. And that's been my priority and continues to be my priority through this year. And I absolutely love what I do there, but it's worthwhile sharing my thoughts about these areas that I'm thinking about where I should be investing in. And Bedford absolutely is on my radar for later in 2026 and into 2027 when I start to look to buy it again. Seriously, that should tell you something about how seriously I'm taking this opportunity. I'm not asking you to do anything I'm not willing to do myself. What am I actually specifically watching over the next 6 to 12 months? I'm watching property prices movements in Wixom's and Kempston and Stuartby, and I'm watching, are they accelerating faster than I expected or are they stagnant? I'm watching rental demand data to see if we start seeing increased interest from people relocating for Universal Studios jobs, construction workers, early hirers, site managers. I'm watching the progress of the construction itself to make sure it's staying on schedule as well, because if it falls behind, that's a big red flag. I'm watching the Wixom's railway station situation very closely because that infrastructure is critical to the investment thesis. That alone, even if the park doesn't perform that well, that is a huge bonus that can bring demand and add value. If that station gets delayed significantly or scaled back, that changes the picture, in my opinion. And I'm watching the broader economic picture, interest rates, mortgage availability, consumer confidence, employment data. I'm in the market already looking at these things on a day-to-day basis. Those macro factors will affect whether the opportunity actually materializes or whether external forces dampen the expected growth. I'm also going to be visiting the area regularly. I live and breathe property, and I want to be on the ground talking to the local agents, understanding which streets are going to be more popular than others and which developments are going to be the most attractive coming out, the ones that are going to be the ones that sell and rent, and what that all looks like firsthand. It's not just enough to say to invest in Bedford. You need to know exactly where in Bedford, what type of property, what price point, what's your exit strategy. The details matter enormously. Right, let's wrap this up. Universal Studios is coming to Bedford. In my opinion, it's one of the most significant property investment opportunities to emerge in the UK in the last decade and maybe for the next decade as well. The scale, the timeline, the economic impact, it all points to meaningful transformation of the region and surrounding areas. But let me say it one more time for absolute clarity. This is not guaranteed. This is a speculation based on available information and historical patterns. You must do your own research, run your own numbers based on your own assumptions, and make your own decisions based on your own personal financial situation and risk tolerance. Speak to property experts, speak to financial advisors, speak to mortgage brokers, speak to local agents, speak to local developers, all of them in Bedford, and get to know the area intimately. Get multiple opinions. Visit the area yourself multiple times at different times of the day and week. It's all about getting your hands dirty, getting involved, burning that shoe leather. Property investing, as I said in my first video, is about long-term wealth building. It's patient capital. If you're looking at Bedford and thinking, I'll buy and double my money in 2 years and sell, I think you're going to be setting yourself up for a little bit of disappointment and potential losses. But if you're thinking, I'll buy and hold for 7 to 10 or 20 years, generate rental income the whole time, benefit from capital appreciation, and maybe pivot to short-term lets when the park opens, then this could be a very smart play for you. I genuinely hope this video has been useful and it's given you some useful information about whether you want to invest or you decide to invest in Bedford or not. The exercise of analyzing an opportunity like this is valuable in itself. It teaches you how to evaluate property markets, how to think about demand drivers in multiple tenant pools, and how to balance opportunity against risk. All of these are super duper important no matter what you're doing. Those are skills that will serve you well across your entire property and investing journey or career, and in like these are crossover skills into other things. So if you found this video helpful, please give it a thumbs up. Hit the subscribe button. If you're considering investing in Bedford or you've already bought there, I'd absolutely love to hear from you in the comments. What are you seeing on the ground? What areas do you think look the most promising? What concerns do you have? Let's have that conversation right here because we're all learning from each other. Subscribe to the channel because I'll definitely be doing follow-up videos on this topic as things start to develop. I want to track what actually happens in Bedford over the next few years and the property prices, the rental market, the construction progress, and share all of that journey with you. This is going to be a multi-year story and I want you to come along for the ride. And if there are other topics you'd like me to cover, property investment strategies, specific areas, finance options, development opportunities, drop them in the comments below. Property investing is what I've lived and breathed for 25 years, and I'm here to share that knowledge and experience with you as best I can and as much as I can. So until the next time, keep building, keep learning, do your research thoroughly, and remember, the best property investors aren't the ones who take the biggest risks blindly. They're the ones who understand the risks. They're taking and making informed decisions accordingly. Remember, Warren Buffett said, business is not about taking risks, it's about minimizing risks. And I'll see you on the next video. Take care. Have a great day.